Alright, ladies and gentlemen, gather around for a deep dive into the exciting world of cryptocurrency investments. Picture this: the year is 2024, and all the buzz is centered around the potential approval of a Bitcoin exchange traded fund or ETF. Now, this approval could be a real game changer, shaking up the landscape of crypto investments as we know it. But hold on, let's take a moment to glance back at history. Remember those big moments like the introduction of Bitcoin futures or the massive Coinbase IPO? They seemed like a boom for crypto, right? Well, surprise, surprise, those moments often coincided with Bitcoin reaching its peak value despite the initial excitement. Now, let's fast forward to early January of next year, and there's a frenzy about the possible approval of a Blackrock spot Bitcoin ETF. But it's not just Blackrock. Heavyweight players like Grayscale, Fidelity, and others are gearing up to dive into the cryptocurrency ETF realm. This could signal a colossal shift in how major financial institutions view and invest in cryptocurrencies. The talk around town points to a potential time frame for ETF approval somewhere between January 5th and January 10th. As it stands, Bitcoin's price hovers around $42,000, having surged from its low of approximately $15,500 post the FTX crash. That is a substantial 2.7 times increase. Even if it spikes to $50,000 by Christmas, that would only be a 3.2 times increment from its lowest point. It seems impressive, but compared to previous growth cycles, it might not appear overly staggering. But here's the plot twist. This time, things seem a bit different. Regulatory matters appear clearer, and unlike previous peak periods in 2017 and 2021, the next significant event affecting Bitcoin supply, known as the halving, is still a few months away. Now, let's move on to the million-dollar question. When is the perfect moment to cash in on your crypto investments? That is a riddle that demands a strategic approach. Some astute investors might contemplate offloading a portion of their holdings once the ETF receives the green light, observing how the market reacts before making any decisive moves. Experts in the field like Eric Bolchunas from Bloomberg Intelligence predict a potential surge of capital into the market if a Bitcoin ETF is given the thumbs up. Remember when a fund named BTO traded $1 billion on its launch day? That's colossal, indicating immense interest and the possibility of a substantial influx of investment. Ultimately, determining the opportune moment to hit that sell button on your cryptocurrency stash relies on your specific goals, your risk tolerance, and staying abreast of market trends. It's prudent to have discussions with experts and contemplate diversifying your investments to make an informed decision that aligns with your financial plan. Alright, let's delve into the intriguing world of finance and cryptocurrency. So, you know what's interesting? Futures tend to be less sought after than the spot market. Picture this. The spot market breaks a record, and it's quite possible, although there's a catch. BIDO was the Lone Ranger, but hey, what if there were like 10 launches happening simultaneously? That combined volume could easily outshine BIDO. Imagine the impact. As a collective, it might just be the most successful launch in history. Now let's talk about numbers. We've got estimates running in our heads, something like $20 billion trickling in during the initial couple of months. That's comparable to what GBTC, a somewhat broken product not even traded on major exchanges, currently holds. Now that's surprising, right? You know, it once had $40 billion, but that's the ebb and flow of investments. You can't overlook the crowd factor. That $20 billion might just be the tip of the iceberg. Over time, we're talking a potential inflow of $150 billion within the first year or two. And beyond that, well, that's a gray area. We'll need to keep an eye on other crypto developments to chart the course ahead. Now, about that Blackrock ETF approval. Brace yourselves, folks. We might witness a slight sell-off. Why? Because some players in the market are traders at heart. And let's face it, Bitcoin's seen a whopping surge of over 150% this year alone. Inevitably, certain institutions might cash in on some profits. Standard practice, right? I mean, if your asset shoots up by 150 to 180%, it's wise to sell off a fraction, like 20% or 30% to secure gains. That is how institutions play the game, protecting their investors while capitalizing on gains. But here's the kicker. Even if they missed the exact bottom, catching an 80% increase post Blackrock's announcement is still a win. So, sell off a portion to safeguard, sure, but we're optimistic. Any dip might just be a momentary blip, swiftly bought up. You know, it's reminiscent of the first gold ETF in 2004. After the initial sell-off, gold only soared for the next 5 years. In a similar fashion, we see Bitcoin reaching for the stars. Now, speaking of strategies, we're holding on to our Bitcoin like a precious gem. However, when it comes to altcoins, especially the riskier ones, I'm all for taking profits when they're up. Our playbook: dollar cost averaging. It's a strategy that helps maintain a steady investment flow irrespective of market fluctuations. It removes the emotional roller coaster of investing and, trust me, it pays off. Even if you began on the absolute worst day in history, you'd still see gains. Now let's break it down. If you'd invested $100 monthly since November 2021, you'd be up over $22 for every $1 invested. Advanced dollar cost averaging involves heavier investments when the market's down and scaling back when it's riding high. No one can perfectly time the market, but strategies like these help navigate the waves. Now let's talk indicators. The 200-day simple moving average, it's like a beacon guiding us through the market's momentum. Above it and moving upward, bull market territory. Below or moving down, that's the bear market. 2024's cryptocurrency investment scene is abuzz with anticipation. Now looking back, past milestones like Bitcoin futures or the Coinbase IPO led to peaks followed by market downturns. However, this time around, the fervor surrounding a possible Blackrock spot Bitcoin ETF approval signifies a different story, with heavyweight financial players signaling a shift in institutional views on digital assets. The key date everyone's watching is between January 5th and 10th for the ETF verdict. Despite Bitcoin's rebound from the FTX crash and predictions of a possible spike to $50,000 by Christmas, experts suggest this growth might not mirror previous cycles. Nonetheless, the landscape feels unique due to clearer regulations and the absence of a looming halving event that typically affects Bitcoin's supply. When it comes to making moves with your crypto holdings, experts advise strategic decisions. Whether it's planning for a potential post-ETF approval market shifts or adopting smart tactics like dollar cost averaging to handle volatility, aligning your plans with your goals and risk tolerance is paramount. This narrative weaves together historical trends, expert insights, and strategic approaches, emphasizing the complexities inherent in navigating the ever-evolving world of cryptocurrency investments in 2024. We are genuinely curious about your take on all this. Share your thoughts on profit-taking strategies down in the comments. See you tomorrow, and let's keep this conversation going.